Good day, everybody. Welcome back. This is Dr. Mercado speaking. Welcome to Accounting 1329, Payroll and Business Tax Accounting. And we are continuing covering the content from Chapter 5, which deals with unemployment compensation. Okay. In this particular lecture, we are going to be covering problem 511A. Please make sure that before you attempt any of your assignments that you have read the chapter. Okay. There's a lot of examples included in the chapter, so please make sure that you not only read, but you carefully analyze all of the different examples provided so you can be able to apply what is explained in the chapter to the actual scenarios illustrated in the examples included. Okay, so let's go over problem 511A. Okay, so the problem reads as follows. It says Hinsky Company was subject to the Alaska state unemployment tax of 4.2%. The company's taxable wages for FUTA were $86,700 and for SUTA $171,000. Compute. We are to compute the SUTA tax that Hinsky Company would pay for the state of Alaska, the net FUTA tax, as well as the amount of employees' unemployment tax. Okay. Now we need to remember, we need to do a recap. Okay. The FUTA tax is assessed on the first $7,000 of earnings for every employee. Once that employee reaches the $7,000 limit, anything above $7,000 is not taxed for FUTA. Now, FUTA is used to administer the federal and state unemployment program. It is not used to pay benefits. It is used to administer the program. That is why the rate is lower. Okay. So we have FUTA, and that does not change. It's the first $7,000 of earnings per employee that stays constant. Now, the state unemployment tax, the SUTA tax, that varies by state. Every state has a limit in which they assess. Every state has a different rate. Okay, and usually, both the FUTA and the SUTA tax are paid by the employers. Okay, FUTA and SUTA are paid by the employers, but there are some situations, some states, that they also make the employees contribute into the SUTA tax. Okay, but that varies by state. Okay, so FUTA tax is only paid by the employer. Okay, on the first 7,000 of earnings. SUTA is paid by the employer as well, with the limitation that there are some states that also require the payment of the SUTA tax. Okay, and there is a summary of the laws by state in your book that explain and highlight which are the states that require that employees contribute into the SUTA tax as well. Okay, so let's begin with letter A. Okay, the SUTA tax that Hinsky Company would pay to the state of Alaska. Now, in this problem, they give you the state unemployment tax rate of 4.2%. So they're already giving you the rate for Alaska. Okay, so the rate for Alaska is 4.2%, and they're also telling you that the taxable wages for SUTA is $171,000. Okay, so they're telling you out of all of the wages we paid, $171,000 are taxable for SUTA purposes. Okay, so this is fairly straightforward to calculate. We know that the taxable wages for SUTA are $171,000, and we know that the rate is 4.2%. That is given to us in the problem. Okay, so we're going to go ahead and we're going to get the 171 times the 4.2%, and that will give me 7,182. That would be my SUTA tax. And remember, SUTA is what is actually used to pay out unemployment benefits in case we lay off any of our employees. Okay, so we're putting in 7,182. The taxable earnings times the state unemployment tax rate. Okay, letter B is asking for the FUTA tax. Now, the FUTA tax is not provided in the problem. We need to know that information. Now, we go back to section 4-2A. It tells us that the FUTA rate is 6%. Okay, on the first $7,000 wages paid to each employee during each calendar year. Okay, but if we continue reading forward in our book, it tells us that the actual FUTA tax is only 0.6% because the employers are entitled to a credit of 5.4. So 6% minus 5.4 will give you the 0.6% actual FUTA tax rate. Okay, so make sure that you read and cognize all of that information. Okay, so our taxable wages for FUTA tax purposes is 86,700. That is provided to you in the problem. Okay, and remember, FUTA is on the first $7,000 of earnings per employee. My rate is 0.6%. Okay, let's see what we get. 86,700 times 0.6%. That will give me $520.20. Okay. Now letter C. What is the amount of the employee's unemployment tax? Use the employee's tax rate shown in figure 1. Okay, so we're looking at the state of Alaska. Okay, so let's highlight here that we are only focused on Alaska. Now, every state has different unemployment laws and regulations. Okay, so we need to make sure that depending on the state that we're in is what we follow. Let me just make this change right here. Okay, here we go. So we're focused on Alaska. Okay, so it says here that the employee, and we are looking at the employee contributions. How much does my employee need to contribute? Remember, SUTA, the employer will pay for it, but there are some states, just like Alaska, where the employee also has to contribute a portion of for the SUTA taxes. Okay, so for Alaska, the rate is 0.56% on the first $45,200 of earnings. So the employee has to pay taxes, SUTA taxes, on the first $45,200 at the rate of 0.56%. Okay, so if you notice here, the rate for the employee, 0.56%, is much lower than the rate for the employer. The employer is paying 4.2, the employees pay 0.56. Okay, so the employee is contributing a small portion into the state unemployment tax. Okay, now the problem occurs where students get confused, where they read 45,200 and they assume that is what we need to multiply it by. Now this is by employee. Every employee needs to pay up to $45,200. Once they reach that number, anything above that, they don't have to pay any more SUTA taxes. Okay, but this is by employee. Okay, when we calculate the amount of the employee's unemployment tax, the problem already says that the company has taxable wages for SUTA of $171,000. That is more than one employee. That could be 10 employees. Okay, so we don't have the details, but that taxable wages represents all of the individuals that work for the company. That is how much we calculated was taxable for SUTA tax purposes. Okay, so how much do our employees have to pay? Where the cap, or the taxable wages in this case for SUTA, is $171,000. Now the employees have to pay 0.56%. Okay, 0.56%. Okay. They're asking for the amount of the employees, not for one employee, but for the total employees. And my total taxable wages for all of my employees for SUTA tax purposes is $171. If they were asking you what is the taxable wages for one employee, then the cap would be $45,200. If it's for all employees, then that is the taxable wages for all of them. Okay, so 171 times 0.56%. So the employees would have to put in $957.60 into the SUTA. Okay. So the first one is the amount that the employer has to pay for SUTA, $7,182. Okay. The rate is 4.2% for the state of Alaska, and the taxable wages are $171,000. For FUTA, the taxable wages were given at $86,700. My FUTA rate is 6 minus my credit of 5.4. That gives me a 0.6% rate. Okay, so my FUTA tax is $520.20. Okay, Some states require that employees contribute also into the state unemployment tax, Alaska being one of them. So we would have to go into our figure 5.1, locate the specific state, and look at under the employee section, what is my rate and my taxable earnings for that specific state. So we know that the taxable earnings are 171,000 for all of my employees. My rate is 0.56. We multiply that and we get the 957.60. Okay, so those are the three requirements. It's very important that you become familiar with using figure 5.1 to locate the information, as well as locate the rates in your book. Okay, you are going to be using these a lot, and I'm not going to be referring back to the text. It is your responsibility to know what the FUTA tax rate is, because that is not provided in the problem. Okay, so that is basically it for problem 511. Very simple. If you have any questions or concerns, please do not hesitate to contact me through Blackboard messages, email, whatever works for you. I'm available Monday through Friday to answer your questions. So that is it. Until the next lecture, have a wonderful rest of your day. Bye-bye.